and I ruffled some feathers from folks that are in the industry and they want to come at me with their alma mater. But I understand where you're from, okay? But you don't know where I'm from. And where I came from and what I know is a little bit above what you're used to seeing. And that's not arrogance. Okay. So just permit me for a few moments to talk and understand that what I'm saying is nothing egotistical. If you're a card player, okay, and you went around, you're playing cards. I'm not saying you go to a casino, okay, but if you went around to where they have private games, if you are a card mechanic, it means you were a card cheat, okay. You know how to run up a card hand, run a deck, deal seconds, deal bottoms, deal fifths, thirds, seconds. Those are characteristics of someone that is highly proficient in card handling. If you had that skill set and you sat down with a lay audience of card players, and maybe they've been playing for a long time, but they just never seen sleight of hand before. They've never seen a mechanic's grip. They've never seen dealing seconds, bottoms, never seen anything like that. And a mechanic that's proficient in doing that and running up a deck. I'm going to show you, okay? I'm going to give you a visual representation of what I mean by this. I'm going to take a brand new deck of cards. I'm going to peel the plastic off of it. I'm going to show it to you. It's all real, not some gimmicked cards. And I'm going to run up a hand with shuffling right in front of you. And I'm going to deal it out. It's going to look just like everything's on the up and up. Everything's fair. You watch the cards go interwove one another. It's shuffled, legitimately shuffled. But I will know every card in its proper order from top down. Just because you hand the cards to someone else at the card table and you watch them shuffle, that is not fair. I'm taking you behind the scenes and showing you what sleight, what gimmick the algorithm is going to be using at that moment. We all watch price deliver through our trading platforms, our broker feeds, CNBC, the ticker tape, everything, all that price fluctuation. Think of that as cards, individual cards. Every time there's a new tick, every new market price printing, that's a new card in a deck. How many cards are there? Well, let's just say for the sake of a whole 24-hour day, there's 52 cards. I have folks that have been floor traders from the CBOT and the CME. I have had people that came from hedge funds. I have had folks that claim to be bank traders. Okay. I've had folks that literally would be the bee's knees on Twitter, but they're not market makers. As much as that title is associated with them, they may be called a market maker. I made the market for oil. I made the market for copper. I made the market for options on this stock. You dealt in price. You didn't make price. You're dealing in the price feed that's coming. Okay. You're not establishing and ordering where price is going. Ultimately, you have no say-so in that. You might find and provide liquidity. That's fine. That's not making a market. That's the point I'm trying to make. And now all of you, because you're all indoctrinated, you're used to seeing all this misinformation. You only know as much as the books and the people that train you when you go to work at these financial institutions know. That's it. That's all you know. If we were to go back to the analogy for cards, okay? We're all watching price. It's just meandering around, going around, banging around between specific levels, and it looks all random. And these professionals and retail traders alike will look at the charts and attribute a bias, a sentiment, an opinion, if you will, and attribute a measure of monetary risk associated to a pattern or the output of an indicator, which only does one thing. It number crunches what the price is already done. Not that it's guaranteed to do something as a result after that. It's looking at something, crunching the numbers, chewing it up, and spitting it out, and you're trying to read it. That's nonsense. The market has no affinity for algorithmic animal patterns. It has no affinity for Elliott wave. It doesn't even know what Elliott wave is. It's not keeping count of the waves. Okay. It's not doing all that shit. It has nothing to do with Wyckoff. Nothing. Supply and demand is an illusion. In commodities, it's a real factor. That's a real market. It's real. It's the world's grocery store. There's a real supply and demand for corn. There's a real supply and demand for wheat, for gold. But there really is no supply and demand for S&P. So it has to be what? Engineered. So when you put down your alma mater for a few moments and just take a step back and think about it, we're all watching price go through the ticker tape all day long. That's equivalent to the cards shuffling at a table we're all sitting at trying to play our hand. But amongst all of us, there's a mechanic. That hand that you don't see that's running the cards the way they want those cards ran. They're calling the pace. They're calling the shots. They know how to make your hand look good enough for you to play it, and you'll plunk your money down, and then they're going to run you. They'll ante up. You'll ante up because you feel like you got a strong hand. You got kings and aces. That's a great hand. Well, it's really not that great a hand when you have a royal flush and spades. Kind of defeats the whole purpose of feeling like you're invincible when you have someone that's on the other side of the table who ran the cards, dealt them out to everybody because it feels while you're there like everything's on the up and up. It's normal. It's just trustworthy. It's a brand new deck, but a new deck ran up like that becomes Cy Stebbins. It means all I need to know is the bottom card and the top card. What does that mean? I need to know where is the buy side and the sell side. Then I just know the rest of the order. I know the PD array matrix at that moment. I know what is likely to be used in price, but the price may print something. It may not give me a breaker. It may just give me a fair value gap. It may just give me an order block. It may just give me a propulsion candle. There's so many things I see. How do you know? Because it's only going to present one or two things. That's it. Visually, I think that breakers and fair value gaps are the easiest one to see. But when we're watching price, and it's moving around, gyrating around, that's equivalent to every trader sitting at the table watching the deck get shuffled. Looks fair, right? Everybody's watching the same price. We're all watching ICT talk about the real-time data in ES. Those candles are moving around. The market's being shuffled. And then finally, I'm counting cards. Not candles. I'm not counting candles. I'm counting cards. And I'm going to see when that hand is perfect for me to bet against because I'm running the deck up. Who's running price? I'm running price. I'm waiting for a specific thing to occur. And then I'll ante up. I'll pyramid, add more to the pot, add more to the pot. Letting retail traders feel like they got a chance. I'm wanting that wrestling match between retail logic traders and their harmonic patterns to wrestle me, which is the market. And the market wins. This is not random. It's not random. I have to stay within the language I've created. That's the only thing keeps me safe. 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 So when you think, but I worked at this firm, we were told that this is what happens, and we see the order flow coming in. You're watching cards being shuffled. You're sitting at the table. You're just right next to the dealer shuffling the cards. And you're going to call yourself the market maker. You're neither. You're not a dealer. You're not a market maker. You're a participant. You're a player at the card table. Prices coming and going, whether you deal in it, trade in it, or not. That price was going there regardless. It was going there regardless of whether ICT mentioned it or not. If ICT would have slept in today, and admittedly, I wish it would have, I'm tired, it would have delivered that. I explained to you where it was going to go, why it will go there, because that's where the orders were. Buy side was resting above that 41.92 relative to the daily chart. Why should it have gone there? Because that's where large funds are. That's where the liquidity is. The algorithm is coded to go to those intermediate term highs like that on a daily chart. In that way, it allows the market to absorb and utilize that liquidity that will be invariably resting above that. It's moved to an inefficiency and it moved into liquidity. That's all price is doing. That's all it's doing. It's predetermined. It's going to be doing whatever it's designed to do from midnight in New York local time. It's established. And to the professionals that are amongst you, I appreciate the respect and candor that you've shown me, even though you may disagree with it. But I promise you, what you think you know, that's not it. That is not it. When you understand how the mechanic, the composite man, the real market maker, when they're running up a hand, stacking a deck, building a market structure, and ready to deal the top or the bottom of the deck, buy side or sell side, you'll know how to play the hand that you have. But if a card counter is discovered in a casino, does the casino invite them to sit at their table? No. If someone says, I can't walk on the fucking grass, I'm going to moonwalk all over that motherfucker. And while I may not be allowed to play at the table, I'm bringing a whole lot of motherfuckers all around the world to play. And with that, be safe.